Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Monday, September the 15th. My name is Anne-Marie Band, and we are looking at the Moneyball Morning Report, starting with the E-mini S&P Futures. I'm widening out the view, looking at the 4-hour formation, but we can clearly see we've got trend. Our VWAP trending up, the larger moving averages clearly trending up. This is a buy the dip structure. Now, the levels that I think are of significant importance at this time come from the bottom to the top. And so we are in a buy the dip. We could have little flushes that bounce immediately, right? See, flush, bounce, flush, bounce, flush, bounce, flush, bounce. So what does that tell you? I need to buy my dips, right? So if we're looking at dip buying formations and we say, hey, I feel comfortable taking the counter trend flush, just remember that these flushes won't trend and you can position for them, but you want to be careful to make sure that you realize it's not going to be for a lot of gains, okay? It's just going to be the clip down into frontline support. And the 4-hour formation on Friday is very telling. The traders are really holding this range, and now they're trying to break to the north. So what levels do we want to see? You can see on the 4-hour, we've got a fair bit of upside momentum. And so this upside momentum plus trend being up literally tells us, listen, you buy the dip. You buy the dip. All right, let's jump right to the 30-minute chart. Let's turn off these gamma lines so we can just see the price action, and we can see same sideways formations. What are the big ones? If you were listening to Market Kickoff yesterday, you'll notice that I mentioned, hey, listen, institutional participation is flattening their positions at the end of the day. If they've been long, they flatten. Here they are being long, they start flattening right about the middle of the day, and then here's the bounce, and they flatten. So we're going to anticipate the same sort of thing in order. Now, if it happens to be that today dips and institutional traders and big money follows this, they're also going to flatten. And that's going to give us a bounce event. So what are the key levels to watch here today? 6,606, that's a breakout formation, but it could sit like a double top so that the first rise up here gets a sell, and then they hold the higher levels. Notice we tested this one, fell backwards into the value area high, which is 6,598, and then it bounced again. Expect traders that trade with their eyeballs to just go, hey, that's a double top, I'm going to short it. The pullback will make for the next buy. Remember, the VWAP is trending upward. We have momentum. Momentum is rising pre-market on our tighter time frames. So everything is showing us this kind of motion. Notice something else. This is the 4-hour candlestick. We talked about this last week when I was talking about what Tom Hugard was saying. And sure enough, they tried to reject that 4-hour. But as Dee told us the last time we were on with her, she said, you know, this works in the DAX and against the Frankfurt market because this opening range can sometimes be a counter trend to what it is that traders are doing. And you'll notice that big reflexive motion after 4 a.m. that begins to bounce. The second time it does it, it pulls back a little, but it holds the area that held the new floor of support. That zone, again, around 6,597, which corresponds to the closing 30-minute candlestick of Friday. Just below that, 6,588, then 6,583. It is my contention that if we fade, our fades will very likely hold the lows of Friday, which come in at 65.75. I'll be looking for some sort of price action event right there. If we expand to the north, it's going to be the same sort of grinding motion up. As I mentioned, there's a pretty big group pre-market at around 6,610 to 6,625, right? So this edge could clearly continue to move. What do you want to do? Listen, if you're trying to get rhythm because you're like, I cannot get a grasp on what I'm doing because I'm trying to change my focus, it always comes down to watching your volume events. All right, so here's our 4 a.m. formation. Very big candle. You know, when you have a 4-hour formation or any formation that gives you a large candle, you will find a fair bit of success using a Fibonacci retracement that allows you to see old resistance that becomes support. It's that S-curve test. For those of you that have been around with me for a really long time, I used to call this the S-curve test because old resistance becomes support, and that's your buy zone that you can anticipate with your stop at the next nearest low. Candlesticks back. Is this going to do the same thing? Potentially, right? But you can use that 4-hour candlestick formation and walk yourself up, because that 4-hour candlestick, 4 a.m. candlestick, on a 5-minute formation is large enough for us to draw Fibonacci that goes, okay, let's see what we could do here. Let's see if it holds that 50% range. And if it holds the 50% range, we can buy it into the forward motion. All right, let's take a look at the NQ. Now, we are also in contract roll. We are moving from the September contracts to the December contracts. That's what makes this a triple witching week. All the contracts roll, they all expire. And so traders have to divide their volume between this contract and the forward contract. If we take a look at that forward contract, that would be the Z, 24,391. And where are we now? Okay, so that forward contract is trading higher than us, right? So there's going to be a gap when we roll into the new contract, and then the price action will do what it does, okay? But right now we are still in the U contract. As you know, many traders say to themselves, hey, I'm not trading rollover. You guys have at it. I'll be back in 5 days when things settle in. Notice the NQ formations. Here is Friday's breakaway to the upside. So this is a clear breakaway. I just saw that Elon Musk said, or he bought like, I don't know, $1 billion of Tesla shares. Literally, I mean, the guy is very wealthy, and he uses it as a tax advantage to borrow against it, so it becomes a tax-free event. I don't want to get all wonky about that, but does that mean that, you know, Tesla should move the way that it's moving? I don't know. But what I can tell you is this. The 4-hour chart here is still holding below the highs of these wicks, which is 24,159. The breakout there gives us that big motion event that could push us higher. Absolutely lots of trend upward. Absolutely lots of momentum. Any deep dip is getting bought. Let's go to that tiny time frame first. You can see that same 4-hour motion, just like we saw in the ES. You can draw your range. Notice this one. This is very interesting. It comes right back, literally, into the close of that candlestick. Holds the VWAP of the prior day. That's what this dotted line is. That is the closing value of the prior day's VWAP. And now it's trying to break out. It's a little bit of a messy curve. For me, I would be looking at that 24,135 area. If it were me looking at this formation, realize traders who see this, they're going to say, I'm taking a short. I'm shorting the top. Double top formation. I short double tops. Listen, trend is very steep. The short can work, but it's going to run right into frontline support before moving to the north because trend is very expressively upside. Okay? So, as we get back to the 30-minute chart, what are the levels that we want to see? All right, the first 30 minutes of the trading day on Friday gave us a high of 24,064. To me, that's a very nice area for buyers to start holding. The point of control and the VWAP are almost the same, right at around 24,030. All of this looks potentially sideways to me as we come into the Fed week. It's going to be a very volatile week, folks. Volatility is going to spike, but dips will be bought. It is just the nature of what's happening. A lot of people leaning on the short edge, and yet they're having to cover very, very quickly because there's no follow through for deeper downside pressure. As you can see, we've been talking about it. They're selling the top of this formation into support. Where is that? The 4-hour candle, right? So take your wins in small patches and then allow the price action to break down. If you're thinking to yourself, hey, this is going to go further, take half the position. Take half the position off and then continue rolling your forward stops down. All right? Super important for us to watch. Upper levels, oh, I should tell you that. Upper levels, 24,175 or so, and then 24,200. We know these lower levels right here. I suspect we stay range bound, but if we break, we're simply going to keep grinding right up. Dips are buys, right? Remember, the standard thing is if you buy the open of a new 30-minute candlestick, right at the open, it's 2 candlesticks to the left that give you your stop. And if you look at that and go, hey, that's 30 points wide, that's too big for me, don't take it, right? Wait for it to come into that support where your stop is actually closer to your entry. All right, let's take a look at oil. Take a look at 4-hour formation, right? What a mess. What a mess. So, what are the traders doing? Completely landlocked. We can see with our eyeballs that they are buying the bottoms. So, this very important, right? They are buying this edge at $61.65. We also know that in large part, they are selling the levels that are near $64.75. Right? $64.50. Now, notice, if they sell it and keep making higher lows, they're going to break out. But this puts us in a very wide spot. That's literally $3 wide. And we need to be conscious of that. This 4-hour candlestick that occurred on Friday has a low right around 62.50 and a high at the value area high at 64. Where are we in relation to that? In value and in range. You know what John Hoagland says about that? He says, hey, better to look for other price opportunities. So let's notice what Friday did. Highest volume candlestick of the day came at 8:30, right? That's the, I don't know why that happened. I was completely out of pocket last week, as many of you know. So the high 63.90, the low 63.23, but look at where the new resistance shows up. It's at the close of the candle at 63.62. The closing candlestick formation at the 2 o'clock gives us a low of 62.50, a high of 62.70, but look at what ends up being the real resistance breakaway area. It's the close of that candlestick at 62.67. The high of the candlestick ends up being new support. That's $62.73. What are we doing? Trend is up. VWAP is sideways. We're in between value area high, value area low. We are below the VWAP, but above the point of control. This is extremely sideways, folks. Do you see how these candlesticks are retracing each other? It's a very messy patch. What do you want to do? Trade the edges. Very messy patch. You want to trade the edges. Wait around for the dip or wait around for the big spike where you see the volume accumulating, right? Notice old support, new resistance, they shorted. Are they coming into a new resistance zone? Potentially. But if you take a short here at $63.05, literally you're going to have to take 25 to 30 points of risk, which is kind of ugly for an oil contract. You want to give it just a little bit of room, or that's just me. I prefer to trade oil with very tight structures on it. All right, lastly, let's take a look at gold. Oh, no, not lastly. We're going to look at SPY. Take a look at gold. Look at the big picture. All right. For the last 1, 2, 3, 4, 5, 6 trading days, we've been sitting between 3,650 and 3,716. Look at momentum. Very high. Look at the breakaway formation here on this. Oh, this is the candlestick event for the highest volume on the 4-hour. I want to move this over here, right? So we know if we break 3640-ish, 3640, we're running into a place where we could really chop around again. Dips, clearly buys, accelerating. Here's the thing. If a trend breaks by time, meaning it goes sideways, doesn't break down, it just starts going sideways, it has a very strong likelihood of breaking in the direction of the prevailing trend. And that is to the upside. Notice how traders tried to sell the tops here. 4-hour formation. There's the first sell, right? Oh, they sold here. I'm going to sell here. Oh, they sold here. I'm going to sell here. Oh, they sold here. I'm going to sell here. They missed out, so they had to chase it. And then, hey, they sold here. I'm going to sell here. And then notice all of this, very likely short covering. Very likely short covering because of 1, 2, 3, 4 times. They get to do it in 1, 2, 3, 4, 5 days. So they got their head handed to them and they had to jump out of the trade. Now, this is what we're seeing next. Dips are going to be buys. So let's take a look at what those levels are. Let's collapse into the 30-minute. Look at this mess. I'm going to trade that. If you take a look on a 30-minute and go, oh, gee, I see, you're going to see, one, the traders are trying to hold the floor. They are trying to hold the ceiling. So there is a range-based trade here. Selling the top, selling the top, selling the top, and covering down here near the value area low. That range begins at the point of control, 3,682. This area right in here is going to provide the most risk if you engage here, the most. So engage below or above, but in the middle, you're going to have yourself a bit of a rock fight, and it can move in either direction with a great deal of speed. If we stare down volume, we can see that Friday was a very low volume event. The close of the high volume event from Thursday gives us a new support. I think that's what we look for, 3,660 or so, right? And then below that, 3,650, which I really don't expect us to see. Of course, you can draw Fibonacci. Your eyeballs can tell you pretty quickly that that's about the 50% range. Remember that 50% really works because traders, we're simpletons. We're going to go the easiest way to pick up cash off the floor, right? Don't overcomplicate things. but just follow the process and manage your risk. Let's take a look at SPY. Let's go to the 4-hour. SPY bouncing fairly nicely. Same sort of sideways pocket formation and then breaking out. This is breaching a new high, right? So it's in a breakaway event. What could happen? Well, the traders who are long pre-market could try to flatten, at which point the gap fill is going to be the next buy zone, and that gap fill is somewhere around $657.40. What is trend? Up. What is momentum? Up and holding steady, right? We got a 4-hour candlestick here that's pretty important. The low of that candlestick is $656.90. The high we're breaching, remember, the traders are going to try and short the double top. They're going to go, yeah, I'm going to short it. And you could see that happening if you go to the 5-minute. You can see them trying to short this edge. Here they are. Look at how fast it breaks down and they buy it right back up. But they did try shorting the top of this range. And guess what they did? They tried to short it again. Why? Because that's a topping formation and that's what they want to do. But trend is very bullish. And so that is going to be really important for us to consider. Dips are buys. Let the chart, if this happens in the first 5 minutes of the trading day, stand aside, let them get their big fat candles in, and look for opportunities where you can buy. That's all the way down to $657.80. It could be down to $658. It could be all over the place, all right? But be careful for whipsaws because traders are legitimately in a cross current over what they want to do here. It is a very epic cross current. Sideways patterns here give us dip formations, but this trend is really giving us the bounce zones and has been for quite some time. All right, folks, that's it for me. Remember, we've got Midday Moneyball, and we've got a VIP session this afternoon that I really am looking forward to. And I will see everyone on the streams. Take care.